It's coming back, and obviously a lot of this is just going to have to do with the macro environment. If we see markets crash again, we're going to see crypto crash along with it. If we see a market recovery, we're going to see a crypto recovery along with it. But I think this is, it's flushed out a lot of the things that needed to be flushed out from the crypto space anyway. When Bitcoin hit 20K, I think, if we saw things melt down much further than they did, right? If we saw, NASDAQ drop 30, 40% from here and Bitcoin go down to 10K per token, I think you would see another round of pain for the industry that would potentially be more of a medium to long-term problem. If you're, 21 years old and you're trying to get access to markets, you want to be able to trade, to invest. You can sign up for an account on a crypto exchange and get full market access. If you try and get that same level of access in equities and commodities, you can't get it. You're going to end up with heavily intermediated access that has pretty limited amounts of real interactiveness, limited amounts of liquidity, limited amounts of size, limited amounts of market data. And so I think for a natively digital generation that's looking to take more control of their finances, actually being able to do it with crypto is a big difference. The crypto world has also grown quite a bit since I got involved, but I was surprised at how big things grew in general, how big I was able to grow things. I thought there was a chance of it. I did see pretty high upside when I got involved. I was surprised that we actually got there. Cryptocurrency exchanges is what we call it, but really it's a combination of a few different businesses. If you compare it to traditional finance, right, you have the New York Stock Exchange, NASDAQ, ICE, and CME as the exchanges, and that's where bids and offers cross. But you don't go to NewYorkStockExchange.com to send an order. They are primarily the sort of back-end trading infrastructure. Separately, you have brokerages, FCMs, and other businesses that sit in the front that consumers access. And then you have different settlement and sort of custody parties sitting in the middle there. In crypto, all of that gets squashed traditionally into one entity. And so what FTX is, it's sort of all of those things. It's a back-end, matching engine, risk engine, custody system, it's a front-end mobile app, website, API, and everything in between, so that, if you want to buy or sell a Bitcoin, you can go to ftx.com and, we offer all the services necessary to do that, except for buying and selling. Alameda Research is the first company I started up, and it was a crypto quant trading firm. And, the sort of founding of it was basically, Bitcoin was trading on a lot of different crypto exchanges, and it was not trading at the same price on all of them. So you might see it trading for $10,000 on Coinbase and $10,100 on Bitstamp. And, in theory, there's a 1% arbitrage to do there, trading those against each other. We don't really know what a Bitcoin is, but we're trading it. Also, this is all crypto. We got a startup together. None of us has run a company before, and we'd like $100 million by next Tuesday, ideally. It was not a very compelling pitch for investors.
So you got turned down.
Oh, yeah. I mean, no one, people were like, oh, that's so cool. I hope you find success. And, no one was. And so what we ended up doing was basically cobbling together lines of credit and other things from various sources, trying to sort of snowball and be able to build on ourselves. Right. Alameda is buying and selling. It's trading for its own book and, trying to do profitable trades. FTX, you can think of it as infrastructure. It's markets infrastructure, so everything that sits between a buyer and a seller. So FTX doesn't buy and sell itself, but it's a venue where people can go to trade crypto, and that aims to solve sort of every piece in between those two parties, from the clearing and settlement and custody, the anti-money laundering, know your customer policies, the compliance, the matching engine, the risk engine, the front end, and everything else. First thing is, I try not to give investment advice, and what I would say is the most effective and useful thing you can do is just try everything out. Take $10, feed it through every protocol, feed it through every exchange, see what it's like, get a first-hand experience of using a blockchain explorer, doing a trade, and that will teach you a lot about how the industry functions. I think I've been really interested in a few different areas of the space. I think I've been interested in scalable blockchains. I've been interested, obviously, in the exchange and platform space, especially on the regulated side. And then I'm super excited about the potential for blockchain-based social media, to the extent that there are projects coming out, in that area around remittances and payments and around market structure. Those are the places that I'm looking at the most right now. I go a lot. I'm there probably every few weeks, and it's been a surprisingly uplifting experience. I was not expecting that. I was expecting it to be a real slog, and I think it could have been in a slightly different universe where you saw continued wars going on between regulators and the industry. What we've tried really hard to do over the last year is get the industry to a place where it is happy to accept sensible regulation, and I think that's helped turn down the volume a little bit on the arguments and get to a place where most people are honestly trying to engage on what's the important federal oversight that we need to give to the industry. How can we do that in a way that makes sense given how the industry operates? So I think what I would say is there's potentially a lot of profit you could make. You could also lose, though. Like, things can go up, things can go down. There is, a lot of upside potential. The biggest thing I would say is don't put in more than you're, fine losing. Like, don't put in money that you'd be really, really sad to lose into, crypto right now. Think of it more as an upside play.